Right. So we're going to start with focus area number 18. The class will ideally go until around 11:30. But if I can finish off the past papers faster, I will finish off the class early as well. So that's up to you. The faster y'all give me answers, the faster we should be able to do, and we can finish it off. Okay. So we'll start. So we'll first do the MCQs. We'll then move into the essay questions. There are not a lot in total MCQs essay questions both together. There is around a 30 odd questions. So we'll see if we can finish it off faster because some questions are very direct and actually very easy. Okay, so we'll start with the first one. No current context today because there was nothing much has happened in terms of local things. Okay, so starting with the 2015 question. So 2011, 12, 13, 14, there were no questions from this income expenditure approach MCQs. That's why we are starting with 2015. So 2015 question number 25. To calculate GDP from the expenditure side, one must add together what? A very easy question. How do you calculate GDP on the expenditure approach? What and what and what do you add? Wages, profits, definitely not wages, profits. Wages, interest, no. Consumption, okay. Investment, fine. Government spending, fine. But exports, what about minusing imports there? Right. So consumption is okay, right? We can consider as private consumption, investment, government spending, and net exports. That is correct, no? Consumption, government purchase, taxes, no, we don't have taxes there. Right. So answer number 2. So see, very easy question. All what they're asking is the components of the expenditure approach. How do you calculate GDP? Then the next one. Question number 22 from the 2016 paper. Which of the following is included in the calculation of personal income, but not in national income? So usually, when you consider national income, you consider GNI, gross national income. Or if GNI is not there, you can take GDP as national income. So GNI, there are certain things that you add. There are certain things that you deduct. And then you get what? Personal income. Personal income, or in other words, you get household income. Personal, we can call that household income. Can you all first tell me, what are the things that we add? So from your gross national income to go to personal income, right? So the income that this is, one of these has to be your answer. The question is saying, which the following is included in personal income, but not in national income. So it's not in national income, but it has to be a part of personal income. That's why we are adding, right? So this is included in personal income, but not in national income. That's why we are adding. Then what do we deduct? Deduct is, it is included in national income. It's included in national income, but not included in personal income. That's why we are removing that. So can you all tell me some components? What should I add? What should I minus? Just for our overall understanding. What's the things here? Okay. What should I add? It's not in national income, but it is there in personal income. You have these transfers, right? You have things like my pensions, even foreign current transfers, right? You have all of that. Okay. So things like these pensions, right? Or in other words, transfers, right? You have to add things like net secondary income. What else? Anything else? Government subsidies, right? So you can put that with transfers also if you want. Government subsidies. Then things like social security benefits, right? So social security, not contribution, benefits. So these kind of things, you have to add. It's not a part of national income, but households are getting it. Households are getting pensions. They are getting worker remittances. They get government subsidies. So those things you have to add. Then there are also certain things that you have to deduct. What do you have to deduct? It's a part of national income, but households don't get. So you have to remove those. What are those? depreciation, right? So you have things like CFC. What else? What else do you deduct? Retained profits, right? The businesses retain profits, or you call it undistributed profits. Then you deduct things like government property income and stuff. Government property income. What else? Social security contribution. Social security, the EPF, ETF and all that you pay, you don't get that, lamai. Yeah. So social security contribution. Anything else? Those are like the main ones, no? So those kind of things you have to deduct. That's how you get lamai. Yes. CFC is consumption of fixed capital, depreciation. Corporate taxes, yeah. So corporate taxes and all, you can read. So that's how you get this. Government property income, lamai, households don't get, and that's government's income. So you have to remove those. That's how you get personal or household income. So question is asking, which of the following is included in national income? Included in personal income, but not in national income, right? Undistributed ones is this lamai, retained profits. Okay. So undistributed profits can be this one. Huh? So they're asking you something in this one. It is a part of personal income. That's why we add, but it is not in national income. So see which one of this could be an answer. The one I have circled in red. What do we have? We have corporate dividends that households do get. You don't have that. Transfer payments, yes. Pensions transfers, it is not a part of national income, but households get. Social security contribution, no, that is in this part. I mean, in undistributed profit, no, that is in this part. Net interest, that households get. Households do get interest. So then your answer there is number 2. So if you know this logical story behind it, you can get this answer. There was a question on this. Difference between personal income is personal or household income means the income that houses are getting. National income is the country's income, GNI. There's nothing called domestic income though. Gross domestic income, that is like your GDP. So interest paid by government, yes, those things you can add, right? So government interest payments you can add to this. Okay, so that's the breakdown. Maybe you can take a screenshot of this and keep lamai. When a similar question comes, I will not be going into detail. Interest payments we don't include in GDP lamai because usually those are payments that were done, payments that the government does for loans they have taken like 10 years ago. No? So therefore, we don't put it. It's not relevant for that GDP. We take it out. Taxes, no, taxes don't get adjusted at this level. My personal income taxes from household income to go to disposable household income, we minus personal income tax. But I'm not going to that level there. I'm leaving it here. Okay, right. That's 2016-22. Why do we include household income? What do you mean household income? We are trying to calculate household income now. Okay, okay, 2017. 1722 is saying, which of the following expenditure would be included in the calculation of gross fixed capital formation? We discussed today in the mock exam series doubt clearing session also, we went through this. Which one? Interest allowance for that year, that also we ideally don't put lamai in GDP. So interest payments households get lamai because if you have bought a treasury bill or bond, let's say a 5-year treasury bill or let's say a 5-year treasury bond, so every year you will get interest. So as long as you bought it. Social security benefits are like, for example, when you retire, you get your EPF back, you get your ETF back, those kind of things. Okay. Which one is this? Gross fixed capital formation. Which one can you put? Newly constructed house could be. Luxury car. Luxury car won't be under fixed capital formation. A luxury car will come under private consumption. Buying shares, that will not at all be in the GDP. Commission paid to stockbrokers, that will not be either in the expenditure approach. In the income approach, it can come under compensation of employees, not gross fixed capital. Then money spent on corn cultivation, it's not corn, it has to be corn. Corn cultivation in a 5-hectare plot, that is also lamai not fixed capital formulation. That's not gross fixed capital formulation. So which one will be fixed capital formulation is this. Now, remember this one, Lama, now constructed houses. Remember this gross capital formation, that is called investment, that is expenditure by businesses. But then you can argue, sir, then houses are not businesses, sir. Houses are bought by people. So if you buy a new house, so why is that not coming under private consumption? Why are you putting that under gross fixed capital formation? That is the standard level. That is based on SNA 2008. Even though households are the people who buy houses, which ideally has to then come under private consumption, we don't read under private consumption. It comes under gross fixed capital formation. So the answer there is number 1. 5 is not fixed capital formation, Lavin. The money spent on corn cultivation, that is your normal regular expenditure. So fixed capital formation කියන්නේ the tangible big assets like houses, buildings, machinery, equipment. Now, for example, if I spend money to, let's say, print my tutes, that will not be a part of fixed capital formation. If I spend money to, let's say, buy a building to do my classes, under that is fixed capital formation. Okay. To build, that would be expenditure. No. So you don't take the expenditure, build it, Lamai. This is the expenditure made to now. In the expenditure approach, how do you do? Expenditure approach is the expenditure done to purchase final goods and services. So you don't look at the expenditure to make the good. Now, then you are double counting. Yeah. Right. If they have said coconut, we can include under agriculture, but we cannot include banana as it only gives one-time harvest. So any good that you produce, you can include that. So coconuts, the banana, the under agriculture output, that is output approach, you can put. Yeah, construction, it's a newly constructed building element. So then you're first time purchasing it. So you can include in GDP. Household buildings, yes, durable consumer goods, you put under gross fixed capital formation. Okay, right. So 22 is number 1. Then going into 2017, another one. 24. Which the following may result in a decrease in the aggregate expenditure of an economy. So when you say aggregate expenditure, you're referring to the components of your expenditure approach, right? So what are the components? You have private consumption, government consumption, investment, exports, minus imports. Right? So when you take this, which of this, Lamai, as an increase in which the following may result in a decrease in aggregate expenditure? Which one do you think, Lamai? C, G, I, X, and M. Look at the equation, you can easily figure it out. If one of this increase, expenditure will come down. Which one? If which one increases, will your aggregate expenditure come down? This last one here, right? Imports. Because imports is a minus. The more and more you import, what happens? Your expenditure can come down. So then your answer could be number 2. Okay. That was a question. Cars, we don't take it as fixed capital because cars, we take it as private consumption. So private consumption is the expenditure made by households. Investment is the expenditure made by firms. So cars are people like you and me are the ones who buy. So we put it under private consumption, not under investment. If a house is newly built but not bought yet, then it's adjusted under yes. Then under inventories. Imports are expenses. That's not the thing. So the more you import, now this is the equation, C plus I plus G plus X minus M, because imports can't be a part of your GDP. The imports are goods made by abroad. So the more and more you import, your expenditure will start coming down. Your expenditure per GDP will start coming down. Yes, you're thinking of this in 2 different angles, right? Imports is the expense for households. Here we are not talking about whether it's an expense for households, we are talking about whether it's part of a GDP or not. That's the thing. Okay. The year of the question is there on top of the screen. Please be in this one. Even houses from houses. Exactly. That's what I said. Even though houses are from households, I told you that's the exception. So even though houses are made by household, the standard says you don't put it under private consumption, you have to put that under gross fixed capital formation. Okay. Right. Okay, so here it's number 2 then. If imports increase, that is where your total expenditure in the expenditure approach can start coming, because that is a minus part, right? But everything else increases, your expenditure go up. Remittances will not be a part limit of aggregate expenditure. Then 2019. 19 question number 21. Which of the following household purchases will be counted? See, the same question that I taught you, right? Which of the following household purchases will be counted as a component of gross private investment when estimating GDP? It is done by households. If it's done by households, it has to be under private consumption. But it will be included under gross private investment. What did I tell you? Something that households are spending, but you don't put that under private consumption, you put that under gross capital formation or investment. Which one? Sovereign bonds, share of companies, debentures, buying a new car, a newly constructed house. Which one? Households do it, but you put it in expenditure. Answer number 4. Number 5. The house story. Cars will come under private consumption. The house is what I told you, right? In this also I told you, even though households are the ones who spend on making a house, you don't put it under private consumption, you put it under gross fixed capital formation. Yeah. No. So 2019 is number 5. That's what the standard says. Even though households spend, you put it under this. Then 2019-22. Which of the following is considered as property income? Okay. Now, what are your property resources? Remember in unit number 1, we learned from land, labor, capital, entrepreneurship. We say 2 of those are human resources, 2 of those are property resources. Which ones are the property resources? Land and capital, right? Land and capital are the property resources. So, right, land and capital. What is the return that you get for land? Return you get for land is called rent. The return you get for capital is called interest. So if those 2 are the property resources, these 2 have to be your property incomes. So then which one is your answer? Which of the following is considered as a property income? Wages and salaries? No, that is for labor. Labor is not property. Interest? Yes. Interest is the return for capital. Could be. EPF, ETF, non-insurance claims, subsidies? No, none of those. So answer number. That's 2019. Then 2020. The main components of primary income. The components of primary income are the same as the components of what? Income approach calculating GDP with a small change. Let me show you the change. The primary income components are now income approach. How do you calculate GDP? You have compensation of employees. You have gross operating surplus. You have mixed income. And then you have GVA, other taxes less subsidies on production. This is how you calculate GVA in the income approach. Compensation of employees, gross operating surplus, mixed income, other taxes less subsidies on production. These are the components of income approach GVA. To make this primary income, what you do is, it's not just other taxes less subsidies on production plus imports. Other taxes less subsidies on imports as well. Taxes on production and the taxes on imports. That also has to get added. Those are the components. Earlier, yes, MI was inside gross operating surplus. Now it is not. Okay, which one is your answer? Number 1. Compensation of employees, gross operating surplus, net taxes on production and imports. That looks okay. The only thing is mixed income is not there, but earlier mixed income was inside gross operating. We'll see though. Compensation of this thing, operating surplus, net taxes on production. Here the imports part is not there. Compensation, gross operating, mixed income, the tax part is not there. Compensation, operating, this one, then there also tax part is not there. Compensating, gross operating, surplus, and other net taxes on production. Then here also, the imports part is not there. So we can go with my answer number 1, because remember I told you earlier, right? Earlier, mixed income was also inside gross operating surplus. But now mixed income is not a part of gross operating surplus, because mixed income is the income earned by these small businesses now. So now you can separately identify those. Therefore, now it is reported separately. Now this is a 2020 paper. From 2022 only they changed that. So from 2022, earlier when you say mixed income, it is inside this, but now it is there. So that's answer number 1. Can we get property? Property income sense? Yes, if you have land or capital, you can get property. Why does skipping option not come in the paper? Skipping in the sense to fast forward or increase the speed? The increase the speed to 1.5x, 2x. That I think I sent a message on the past paper class group. Fast forward, I'm not sure, am I? Maybe you will have to skip it with this one. So if you want to increase the speed, you right click before zooming, before going into full screen on your laptop. If you right click, you get a small black color pop-up where you can increase the speed. In your paper, mixed income is yes, separate thing. I've told this 100 times, Lamai. Hope you all know. Okay. Then that's 2020. Then the next one. 2020 question number 22. Look at this level. If personal income exceeded national income, it can be concluded that. Now for this one, you need the knowledge that I taught you all before. So from national income, national gross national income, there are certain things you add, certain things you deduct. And that is how you get personal income. So can you just tell me, Lamai, they are saying personal income exceeded national income. Let's say, for example, personal income is 120 billion. National income is only 100 billion. Just put some numbers below. Personal income is higher than the national income. So what can you tell about these things that you added and deducted, Lamai? Which one do you think would have been higher? What you added or what you deducted? How can personal income be more than national income? Whatever you added would have been higher than whatever you would have deducted, right? Maybe, for example, you would have added a 50, deducted the 30. That's how you got this 120. Right? If personal income is more means, whatever you have added, what do you add? You add things like, for example, these pensions, the transfers, you add things like what? Net secondary income, right? You add things like government interest payments. So whatever you would have added would have been more than whatever you would have deducted. What do you deduct? Social security contribution. You deduct undistributed profits, or we call it retained profits. You deduct things like government property income. So then, can you look for an answer that says that? Something that says whatever you would have added should have been more than whatever you would have deducted. See for an answer like that. What do you all go with? Number 1, the amount of transfer payments, okay, that is something you add, exceeded the sum of social security contribution, that's something you minus, corporate income tax you minus, undistributed profits. That looks okay. So transfer payments are something you add. If that is more than these things that you minus, social security contribution, undistributed profits, corporate taxes, then this could be correct. So this can be our answer. We look at the others also. The sum of social security contribution, corporate tax, and undistributed profit exceed transfers. Can that be an answer too? If the addition of social security contribution, corporate taxes, undistributed profit be more than this, no, then personal income will be lesser. So can't be this. Sources, sum of social security contribution and corporate income tax exceeded indirect taxes. Indirect taxes, now we don't include that. Amount of transfer payments exceeded the sum of social security contribution, corporate taxes, and indirect taxes. Indirect taxes, number we don't put it over here. Right? There's a taxes on goods and services. Ideally, you don't put. Sum of corporate taxes, indirect taxes, again, no. So indirect, we don't put. So it can be number 1. So as long as you know what are the components, what do you add and what do you minus, you can get your answer. How is corporate taxes included in national income? Corporate taxes are part of national income because that's part of this. No, net taxes on products and corporate taxes are different. Corporate taxes are, that is corporate income taxes. Right now, income tax gain. Now, for example, okay, let's say for IT tutor, if government says, Arshad, for every student, you have to pay a tax of 500. That is called a tax on product. What is my corporate income tax? Now, I have my balance sheet. Balance sheet, you get profit before tax, tax that is corporate income. So corporate income tax is different from taxes on products. Those are two different things. Okay. How is it included? What is included? Corporate income taxes. So that is still a part of income of businesses, no? Part of income of businesses that goes into the governments. That becomes a part of the government's income. Okay. Indirect tax, now you don't add it over here in this equation. Indirect taxes, you don't add deduct, it's just them. There are a few questions. Is government interest? Government interest, yes, you can include as an addition. Okay, right. So then your answer is number 1. Done. Then 2021. 21 is saying, which the following items is not included when estimating GNI from the income approach? Which one do you think is not included? Compensation of employees, mixed income, consumption of fixed capital, other taxes less subsidies on production, employee contribution to the EPF. Not included is the last one, because this employee contribution will not be there part of G income approach because households don't get that. But if you say my employer contribution, it will be there. Now, inside compensation of employees, what and what do you have? You have your basic salary. You have any bonuses, any, let's say, social security contribution on behalf of you. Now, the employer, the place you work, on behalf of you, they pay some amount of money, right, for the EPF, ETF. Now, that is also part of social security contribution. That's a part of compensation of employees. Social security contribution by employer, that will be a part of this now. That is why when going from, even though that's part of compensation of employees, a part of G and I, it doesn't become a part of personal income because we don't get it. No, even though the business pays it on behalf of you, it's a part of compensation of employees, we don't get it. That is why you minus this social security contribution. So get the logical story behind that. So here, the one that you don't include, the employee contribution. Employee contribution we won't put because that is already inside your salary. From your salary, you pay employee contribution. So you don't go and add that again, right? So that's the one that don't put. Everything else is there. No? If you take GNI, compensation of employees, you have gross operating surplus. Inside this, you have net operating surplus and CFC. Then you have mixed income. Then you have other taxes. So all of that is there. No? Compensation, mixed income, CFC, other taxes. So all of that is there. Then the one that is not there is number 5. Net salary, yes, you will put your salary, yes. That's the part you're doing. Household income, we deduct EPF of employee. Yes, EPF for the employee. Social security contribution that you make, not what the business makes on behalf of you, never. Okay, done. So 21 is 5. How does indirect taxes don't affect now? Indirect taxes are taxes on products. No? That is from GVA to go to GDP, or you adjust for indirect taxes. Okay, that's 21. Then going to 2022. Which the following should be classified as consumption expenditure when calculating GDP? Which one is consumption? Purchase of wheat flour by a baker to bake bread. Purchase of a computer software by the Ministry of Energy. Donating used clothes for a charitable organization. Purchasing 1,000 shares, spending 3,000 to have dinner. Which one? Consumption expenditure lama is the expenditure made by households to consume final goods and services. So which one of this is a household consumption item? 1, 2, 3, 4, 5. Number 5, right? You go and have dinner outside. That will be included under private consumption. Shares we will not include. Donations we will not include. Both of this lama purchase of wheat flour by a baker, that is intermediate consumption. That also we might not put. Purchase of a new software by the Ministry of this thing, that you can put under investment. Expenditure made by businesses. The EPF of employer, though they pay, households don't receive it that year itself. They get it once they retire. So only those given to them in that day is included. Yeah, that's what you call social security benefit. No? So that you include. Let's say when you retire and get the money, that you get. But every month what you contribute, you have to deduct. Okay. Okay, 22, next one. Suppose a wealthy person bought a holiday home in New Delhi, which he or she used to rent every year. Due to this transaction, what will happen? GDP decreases by the amount of the purchase of the holiday home because consumption decreases. GDP increases by the amount of the purchase of the holiday home because investment increases. GDP is unaffected because it is a second-hand sale. GDP decreases because investment decreases. Investment increases, but consumption decreases. Which one do you think? Okay, first of all, a wealthy person has bought a holiday home. Is this a newly constructed one, or is this a already existing holiday home? Has the question told you that it's a newly constructed holiday home? No. So maybe there is a foreign resort in New Delhi. One person who has money has gone and bought it. So will that affect GDP immediately? If I go and let's say buy a holiday home that has already been built and someone was owning that, will that be a part of GDP then? No, because if it is a newly constructed one, yes, Lamai, because it's a brand new purchase. But here it won't because this is second hand. That you won't, right? So this won't be there, right? This holiday home thing won't be there. And then they say which he or she used to rent every year. So maybe if you rent it in the future, yes, it can be included in GDP in the income approach. Income approach again. Maybe under, if you are an individual person, maybe that even could be under, remember, rent, wages, interest, profits. You can even put it somewhere there. Okay. Then which one do you think is your answer? GDP decreases, you can't say. GDP increases by the amount of the purchase of the holiday home? No, because it will not be there. GDP is unaffected, could be your answer. GDP decreases, never decrease when just because you buy a holiday home, GDP won't come down. Right? Investment increase, but consumption decrease. How are you saying consumption decrease? Just because you buy a holiday home, you can't say consumption comes down. So therefore, that also goes back. So this could be this. Number 3. So be very careful. Remember, new ones you will include. So you buy things in an auction, you buy things of this question now, the renting out part, even though they have talked about, nothing of that is reflecting in the answer. The rent that you earn now can be in GDP, but there is no answer that talks about the rent that you earn, because all the answers are talking about the expenditure approach. Expenditure approach, you will not talk about the rent income. Then you have to combine expenditure and income approach together. That's why they're not talking about the rent. The rent part is just given to confuse you to make the question a little long. Okay. Then the next one, 2023. Gross national savings can be calculated by deducting which of the following from gross national disposable income? If it's brand new, yes, it will affect GDP. How do you get that? So you have gross national disposable income. How do you go to national savings? Okay, first of all, tell me, what does gross national disposable income include? Gross national disposable income in your expenditure approach is what and what and what? It's your private consumption, your government consumption. Both of these together is called final consumption, total final consumption. You add investment, you add net exports, then that is GDP. For that, if you add net primary income and net secondary income, you get disposable gross national income. So what is national savings, Lama? National savings is this, right? Investment, net exports, net primary income, net secondary income. So from gross national disposable income, if you want to get national savings, what should you minus? You have to minus this part. If you deduct this part, then you will get my national savings. So to get national savings from gross national disposable income, you have to deduct this. What is that? Which one is your answer? Taxes, final consumption, net exports, gross domestic capital formation, transfers. Final consumption, right? If you remove final consumption, that is this private consumption and government consumption, you can get the balance. So your answer there will be number 2. That was a question. Because we spent money on investment for some time, our consumption will decrease. You can't really say that exactly also, right? So that consumption will come. Then you have to argue the disposable income, the more money is gone there. But the thing is, you can't also say investment increases here because the second hand thing. And now, even okay, let's say you argue that consumption comes down here. But how are you saying investment? Investment, and then you create something new. There's nothing new that is happening. How much of we score an MCQ to get an A? I think that is important. Practically think can see if you want 75% from the 50, how much should you get? But there is nothing saying that you have to get this much for MCQ. It's about getting your paper 1 and paper 2. You have to get in total, you have to get 150. So I would say minimum keep at around 40 out of 50. Okay. 2024. An economy where gross national disposable income is higher than the gross national income reflects that. Is in a way. So from your gross national income, how do you go to gross national disposable income? What do you have to add? You have to add what? Net secondary income. Or in other words, net current transfers. Net current transfers, or we call it net secondary income. So then, if your gross national disposable income is higher than GNI, so let's say your gross national disposable income is 1,200 and this is only 1,000, what should your net current transfers be? Your net current transfers, your foreign current transfers have to be a positive number, right? It has to be a 200 then in this case. So which one goes in line with that? Trade deficit, trade surplus? No, that is net exports. Domestic production exceeds consumption? No, that is GDE, GDP. Saving more than investing? You can't save. Net foreign transfers are positive? Yes, guys, these are very easy questions as long as you know the equation. If you're thinking that these are hard, these are not really hard ones. Can we add transfer payments in GD? GO? Sure. Gross operate. What is GOE? I think COE, compensation of employees. Transfers will not be a part level. Transfers can there are these certain ones, just government transfers. Okay. 24 is 21, question number 5. Then there is one last MCQ. 2024 question number 22. Select the national income data for a hypothetical economy is given. What is the value of GDP and GNI? So first of all, look at the question and tell me which approach should we use. Compensation of employees, gross operating surplus, mixed income, CFC, other taxes less subsidies on production. This is income approach. Right? So income approach, how do you calculate GDP? You have compensation of employees, gross operating surplus, mixed income, other taxes less subsidies on production. You then get GVA at basic price. For this, if you add tax less subsidies on products, you get GDP. So how much do we get? Compensation of employees 600, gross operating surplus 800, mixed income 850, other taxes less subsidy on production is 50. How much is my GVA element? Gross value added is 1,004, 900, 2,300. No? GVA is 2,300 plus other taxes less subsidies on production. Sorry, plus taxes less subsidies on products. How much do we get as GDP? GDP is 2,420. Then they're asking for GDP and also GNI. How do you go to GNI? To this, you have to add net primary income. Net primary income, they're given as minus 20. So how much is my GNI? 2,420 minus 20 is 2,400. So answer then number 1, 2,420 and 2,400. These again are like 3 marks in the paper. As long as you know how to calculate, just add and give the thing. Done. Okay, those are the MCQs from income and expenditure approach. How did you all do? There was, I'm guessing there was around 14 MCQs. How much out of 14? At least around a 9, 10, I would feel is a decent enough. Let's quickly add and see how much you all get. The chat, I can keep it for everyone. I can keep it personally also. I'll keep the chat personally. How much you all get? Okay, right, good. So we'll then move into the essay questions. Can go without a break. So we'll quickly do it and finish off. Yeah. Sure. No need a break. No? Okay. So we'll finish off soon. Give me answers fast. GVA is gross value added. Yes, those are not questions that you have to ask me with 2 months to go. Okay. 2011 A-levels question 4, part 1. What categories of income are included in the income approach of calculating GDP? So the answer in the what past pay book will be the old one. It will say rent, wages, interest, profit. Not that. So what do you add? Right now, you have compensation of employees, gross operating surplus. If you want, inside this, you can give net operating surplus, consumption of fixed capital, mixed income, other taxes less subsidies on production, and net tax on products and imports as well. Net tax on products and imports if we want to get GDP at market price. So just the normal income approach calculations. Please don't write short forms. Now, write the full thing. It's a 5-mark question. For 5 marks, remember, you can take 1.5 minutes per mark. So you can take 7.5 minutes to write this answer. So don't say COE and GOS, write the full thing. We don't take imports coming because this is net taxes on products. This is taxes on products and imports, not imports. Imports will come under expenditure approach minus, not that. So that's that. Instead of net, it's okay to write minus. Yeah, you can say plus taxes minus subsidies. That's fine. Net taxes on products and imports if you want to get GDP at market price. That's where the tax on products and imports. So they're asking for GDP. No? So GDP, you have to give the net tax on products now because only these are GVA. This is GVA. But remember, GVA basic price to market price. You have to adjust for net taxes on products. And if there are net tax on imports, you adjust for that as well. Usually in questions, they don't give you net tax on imports. Okay. Then the next one, 2011, question number 3. The following is the information for national income accounting: net domestic product, net exports, net taxes, disposable personal income, personal savings. Nice, interesting question. 5 marks, 5 different calculations. They've given us GDP. They've given us investment, net investment, private consumption, government consumption, and government budget surplus. So how do we do that? No, rent, wages, interest, profit level, there is the old method. You can't give that. That is what would have been in the marking scheme before. So now you can't say income approaches, rent, wages, interest. All right. First one is net domestic product. How do you get net domestic product? Net domestic product is lamai from your gross domestic product. If you minus what? If you minus consumption of fixed capital minus CFC, you get net domestic product. So how much is my GDP? They're saying it is 6,000. How much is my CFC? My CFC deal nahe. You all know the difference between gross investment and net investment is CFC. Aggregate income, you can give those couple, that's fine. How much is CFC? Gross investment is 800, net investment is 200, means 800 minus what do you get? 200. Your CFC should have been 600. So show that working. Gross minus net is your CFC. So then CFC would have been 600. How much is your net domestic product? Net domestic product would have been 5,400. That is part A. Yeah. Then question B. Question B is saying net exports. So we'll see how to get that. Now here am I. You have all the components to GDP. You just don't have net exports. So GDP is equal to private consumption, government purchases, investment plus net exports. They have told us GDP is 6,000. They have told us private consumption is 4,000. They have told us government purchase is 1,100. Investment, they have told investment, remember you get gross investment because you're calculating gross domestic product. So gross investment 800. Then how much is the missing number? Net exports. Do the maths for me and quickly tell me. Net exports missing number. You get 100 plus 100. No, remember net exports can be negative also. Plus 100. Okay. So you get 100. Cool. Done. Then C, net taxes. How do you get taxes? Instead of GDP, it should be GDE. Which one should be GDE? No, GDP. So GDP is C plus G plus I plus NX. So you put the equation, you can get. Okay. Then net taxes. How do you get net taxes? Now here they have told you taxes minus transfers also. So remember, you can get it from what? The budget balance, right? Remember government's budget balance. Government's budget balance is government's income, that is net taxes, minus government expenditure. So they are telling there is a budget surplus of 30. That means budget balance is plus 30. Then taxes is what we are trying to find. Government spending, they have told us, is 1,100. Then how much should our taxes be? If you want to have a surplus, budget surplus, so move it around. You get how much? Net taxes are 1,130. Okay, that is part C. Then you have part D, disposable personal income. Okay. So how do you go to disposable personal income? They have told you, Lamai. Now, remember, from national income, you have to calculate what? You have to calculate personal income. From that, you have to go to disposable personal income, right? So part D. Now, how much is my national income? My national income, you have to take GNI. Have they given us GNI? Have they given us GNI? Net primary income, anything added there? No GNI. If there is no GNI, what can you take as national income? You can take GDP as national income if GNI is not there. So how much is my GDP then? You can take GDP. So then that is 6,000. So from this lamai, how do you go to personal income? Remember, I showed you in the MCQs. There are certain things that you have to add, certain things you have to deduct. What and what do you add? You have to add lamai pensions, any transfers, social security benefits, any let's say net secondary income you're at. What and what do you have to deduct? You have to deduct lamai consumption of fixed capital, undistributed profit, government property income, you deduct those. So all of those are not there in this question lamai, but something is there. What is that? One thing is there. There are so many things to add and minus, but what is that? The CFC is there. Consumption of fixed capital. Yeah. So that is how much? That is given as 600. But do we deduct taxes at this stage? Not really. Right. So how much do we get as personal income then? Personal income is a 5,400. But are they asking for personal income? No, they're asking for disposable personal income. So how do you go from personal income to disposable personal income? You have to deduct any direct taxes. So that is called income tax. Then you get disposable personal income. Now here the problem with the question is, this taxes that you found in part C, they are not saying that all of this is direct tax. Now, when you say government tax, that can be indirect, direct, it can be anything. So question hasn't told, but then we'll have to assume meeting that all of this is direct. Remember, we did a mock exam question also similar. Okay. So we'll assume that this is direct taxes. And then you can get this. So how much do you get as disposable personal income? 4 to 70. Can someone check also Lama in the, I don't know if I made a calculation error. In your past paper book, do you have the same answer? Or are they giving something else? Yes. Fine, right? So remember this, right? From your national income, you have to go to personal income. So there are things to add, there are things to deduct. Not all of that is given in the question. So the only thing you have is CFC. So you minus CFC, you get personal income. From that, if you minus direct taxes, you have to get it as this. Now remember, anyway, this taxes, if it is a direct tax you minus from here, if it is like a what? Corporate income tax, you will have minus before. So they are not very clear what that tax is, but we'll assume that it's a direct tax. There are certain past papers we'll do in the next part. It says that this is direct taxes. So then you definitely know. Okay, right, that is this. So how do you get personal savings now? Your disposable income is 4,270. From this 4,270, how much is private consumption? Remember, personal, private kind of in the same thing. No? How much? So you're earning 4,270. You're consuming 4,000. How much are you saving then? 4,270 වලින් 4,000 consume කරා නම් save කරන්න කීයද? You save a 270. That is your part E. 270 personal savings. This is a nice, interesting question. And I'm happy that they're only giving you 5 marks. I'm borrowed 2 marks each. These are 10 marks. Then I put up 2 points. But small things I want you all to learn. It's a good question. Okay, then going to the next one. How many people got all 5 of that correct? Private investment is investment by businesses. Yes. Good. Nice. Okay. So 2013 A levels part 1. Okay. What do you mean by changes in inventory? Why are changes in inventory included as a part of investment spending? So what is this change in inventory story? I would have explained before as well. So what is the change in inventory story, Lamai? That is this. Now, I'm not sure if I did it last week, but I'll just go through. Let's say, Lamai, okay, take my MCQ books. I told you, I'm going to do a MCQ program for y'all. Probably somewhere around the end of next month, I will start. So I have 2 MCQ books, 500 MCQs each, grade 12, grade 13. So let's say Now, I don't know how many of you all will come to the class. So let's say I print 1,000 books. Okay. So I have printed, let's say 1,000. Okay, let's say 500,000 for that. I print 500 MCQ books. So let's say if I print 500 MCQ books in your GDP, in the output approach, right? Output approach is the all the final goods and services produced. No? In the output approach, this is manufactured KMO. So under industry, this 500 books will be there. Under all 500 books are there in the output approach. Then in the expenditure approach, let's say all these 500 books got sold. I printed 500 books, 500 of you all joined, all the books got sold. So then expenditure approach will also have 500. But there is no guarantee that all what I print will get sold. Let's say I printed 500, but I was only able to sell 450. Just assume below. I was only able to sell 450 books. So if that is the case, then there is an issue. Output approach is showing a GDP for 500 books. Expenditure approach is saying, look here, private consumption, that is the consumption from you all know. You all have only bought how much? You all have only bought 450 books. So expenditure approach under private consumption, there is expenditure only for 450 books. Output approach says, nah, there are 500 books. So now then the output approach and expenditure approach GDP calculation will start differing. The final answer won't be the same. There is an issue. So what is GDP? GDP is the value of all the final goods and services produced during the year. So this 450 is not what was produced. This 450 was what was sold. There is another 50 that was produced. The other 50 that was produced, let's say it's in my book rack. I was not able to sell. So that 50 also should be a part of GDP. Even though there was no private consumption, even though you all didn't spend and buy it, right? It's not under expenditure. I spent to produce it at least. So therefore, that 50 lamai will come under change in inventory. That 50 comes over there. Then that is how the output approach and the expenditure approach tallies. Because otherwise it will not tally, because every good that was produced during the year will not be sold during that year. There is an issue there, because sometimes, now even think of this fellow, think of, let's say, okay, take a motor vehicle. Let's say Sri Lanka is producing a car. We produced the car this year. That means output approach GDP produced this year. But it was sold next year. Then under expenditure approach, that car will be next year. Then there's an issue with the GDP. Output approach is saying, nah, this has to come this year. Expenditure approach, nah, it has to come next year. So there is a bit of an issue there. That is why, Lama, you do that inventory adjustment. So what you do is, now you take the year we look 2000, let's say this is 2025. 2025 Jan to 2025 December. December 31st. Jan 1st and December 31st. So whatever inventory that we have at this point, right, on the 1st of January. Now think, let's go back 8 months. On the 1st of January this year, there would have been inventory. Now shops have, think of Cargill's. Cargill's has Maggie noodles, biscuit packets, ice cream, Keel's has different stuff. No Limit has clothes. So all the shops out there have inventories. Okay. None of it has been sold. Still, this is the 1st of January, let's say 12 midnight. When will this get sold? Somewhere in 2025. But should that be a part of 2025's GDP? Were those goods produced in 2025? No. Whatever we had at the beginning of this year was produced last year. 2024 වල produce කරපු biscuit packet and noodles and ice cream and whatever is what we had on the 1st of Jan. That is what will get sold. So output approach would have recorded those in 2024. Expenditure will happen in 2025. There is an issue there. Because GDP is not all the expenditure made by people. GDP is all the final goods and services produced. So therefore, what you do is, this opening inventory, this is called the opening inventory. This one you have to remove because it is not a part of this year's GDP. Whatever we had at the start of the year is a part that was produced last year. So ඒව දාන්න බෑ මේ year GDP එක. You have to remove those. And then at the end of this year, we have a closing inventory. At the end of this year, there is a closing inventory. At the end of 2025, now, during this year, now I am producing my MCQ book. So many people are producing so much things. By the 31st of December, not all of that will be sold. Whatever that is sold will get adjusted under private consumption. But whatever that is unsold, that is closing inventory. That is this 50 I showed you. So you have to ideally remove your opening inventory at your closing inventory. That is what you call this changes in inventory. So this inventory, so you refer the marking scheme and write an answer, but I'm just explaining this to you. So what you need to say is, what is this changes in inventory? This is the expenditure made by businesses on raw materials, final goods or whatever, which was not sold during the year. So there is an issue there. So in order to bridge that dilemma, you have this change in inventory adjustment. So why is it a part of investment spending? Because businesses have spent money to produce it. Now my 50 MCQ books, even though 450 is sold, is private consumption. The 50 that is unsold will be under investment spending because I have produced it, which was sold on the production year. No, so whatever that is not sold, right, produced this year, sold this year, no problem. But the issue comes when something that was produced in the last year, when it gets sold this year, or something produced this year gets sold next year. That is where the adjustments come. Now, for example, if something was produced in February, sold in March, there is no inventory adjustment. Output approach will also have the same number. Expenditure approach will also have the same number. Produced in Feb, sold in March. But if you produced it last year and sold it this year, there is a problem. Output approach will say last year, expenditure approach will say, May year tama expenditure. So that's where the adjustment has to happen. Same thing if you produce this year and sold next year. That's where the inventory adjustment comes. So I didn't copy and paste answer I wanted to, but I didn't have the time. So you have the marking scheme now. There's PDF of the marking schemes are there in your past paper class group description as well. You have a past paper book, but in case if you don't have, you can refer to it. So understand the logic behind it, then refer to the answer. You can write a nice one. Cool. Done. Then the next one. 2013 question 4 part 2. Why are interest payments by the government considered a part of personal income but not a part of national income? There are two parts there. Okay. So why is it not a part of national income? First, we'll tell you. Why do we not put interest that the government pays in national income or in GDP? Because it is a non-productive thing. Because these are loans. It's a non-productive transaction. These are loans that were taken, let's say, long ago, and now they are paid. And also you can say not relevant for the current year. So GDP has to include whatever goods and services you produce during that year. May 2 years or 3 years කලින් ගත්ත loan එකක් දැන් ගෙවුවම, when you pay the interest for that, that can't be a part of this year's GDP. Then for example, in Sri Lanka, okay, just think, Sri Lanka, when we have huge budget deficits, we have crazy budget deficits, interest expenditure is so high, then our GDP has to increase. Doesn't make sense, right? Government is borrowing and increasing their debt world interest world, then you can't increase your GDP like that. So it's not a productive thing, and most of it is not relevant for that year as well. That's why you don't put it in GDP. Then why is it a part of personal income? Now, government debt, some of this debt is treasury bills and bonds sold to, let's say, households. Households can buy them. Now, you can't directly buy a treasury bill or bond. But now, for example, let's say I want to buy a treasury bond. So how can I buy a treasury bond? I can get in touch with the primary dealer. Right? Let's say banks are primary dealers, or you have these separate primary dealer firms. There are around 10 in Sri Lanka. I can get in touch with one of them. So I can tell, okay, let's say, for example, commercial bank. They also have a primary dealing unit. So I will get in touch with commercial bank and say, look here, I have 100 million. I want to buy a government bond. So what will commercial bank do? On behalf of me, they will go and bid in the auction and buy a bond and give me. So they will keep a small profit. So let's say they buy the bond at, let's say, 13% interest. They will give it to me at 12%. So that 1% they will keep as a profit margin. That part and all you all don't need. But that's how that will work. So then every year, let's say it's a 5-year bond. So for every year, I will get that 12% return. So it's a part of personal income. I get that money. So a lot of people have done that in Sri Lanka. So many people who have money definitely buy treasury bills, bonds in government securities. So even especially businesses, forget about individuals now. What about businesses who have a lot of money? So there are so many businesses that have excess cash with them. They don't put those in savings accounts and keep them excess cash. Down treasury bill or treasury bond. Because those are very liquid markets, you can soon make profits. So that's why it's about a personal income, because households receive it. Households receive it, and it affects households' disposable income, and they can actually spend it. That's that. Yeah, putting money in treasury bills and all, usually government things, it's considered as zero risk. But Sri Lanka is a questionable thing, but that's what it is. Yeah. So again, that story is what you have to then explain for 2 marks and 2 marks. Why is it not a part of national income? But why do we put it in personal? Next one. Okay, this one is the easy one. A country that spends more than its national income must have a deficit in the trade balance. So here when they say national income level, they are referring to GDP. So, sorry. Yeah. National income is GDP. The spending is GDE, gross domestic expenditure. GDP is your national income. So if you're spending more than what you're earning, you're spending 110 million, but your GDP is only 100 million, what you're producing. That means, what can you say about your net exports? Your net exports have to be negative. You have to have a deficit in your trade balance. So that story is what you have to explain. Now you have to say, look here, what a country spends is this. This plus this plus this is what a country spends. A country's national income or GDP is this. So if you're spending more than what you're earning, the difference between these two is your net exports. You're spending more than what you're earning, this has to then be negative. These are not difficult questions, but what you have to again learn is how to expand and write this for 4 marks. That is where your answer writing comes. So please write answers. We will do that in the mock exam series, but you don't have to be a part of my mock exam series. Whatever class you go, now you have to start writing papers. Ideally, keep writing full papers. That is the ideal thing you have to do. Okay. That's 2013 question number 3. Then going into 14. 14 is saying, wow, they're giving 12 marks for a calculation. Aggregate demand equation, GDE, GNE, net national expenditure. Private consumption, government spending, imports, private investment, factor income from abroad, change inventory, depreciation, exports, factor payments to abroad, purchasing raw materials, purchasing shares, all of it they have given. Okay, first one is construct the aggregate demand equation. Yes, what's the aggregate demand equation? We learned that in unit number 6 actually, but what is the aggregate demand equation? Aggregate demand equation is equal to your private consumption, investment, government spending, plus exports, minus imports, or plus net exports. So here, you don't have to solve it. You just have to put the numbers. That's the equation then. Private consumption is how much? 800. Investment, domestic private investment, 200. Do you have to add inventories again? No, because it is already inside it. If they give you total investment, it's already inside. Don't add again. Then government spending 150, exports 80, imports 60. I think if you give them, that should be okay. Can you all check your past paper book? Check if this is the final answer they have put, or is there anything else? Have they added and given? For the equation, just check the past paper book. Since they're asking for the equation, even giving this is okay. Yeah, so only writing the equation and putting the numbers itself is okay. Now, I don't think you have to solve it again. Give me a second, hold on. Right. So this one, yeah, even the equation without numbers should also be okay now because they are just asking for the equation. Right. So when they say construct the equation, even writing the full forms of this, if you want within brackets show some numbers, it's fine, but you don't have to solve it and say AD equals this one. No. Okay. So I will leave it at this point. Even if you just give the equation properly, that should be okay. Yes, that's the 2014 paper is actually a bad paper. It's a very easy paper. I will not recommend doing. Okay. The next one is gross domestic expenditure, GDE. So how do you calculate GDE? GDE is your private consumption, investment, and government spending. So private consumption is 800, investment is 200, government spending is here the 150. And how much do you get as GDE? 1150. So then, how do you go from Lamai part C, GDE to GNE? No, GDE. Now, GNE is another term for Lamai GNI. Don't get that confused. GDE to GNE, you can't directly add net primary income and go there. You have to first add net exports, go to GDP, add net primary income, then only you can go to GNE. Remember that. So how much is my GDE? 1150. Net exports are how much? Exports are 80, imports are 60. So 80 minus 60 is, you get 20. Then GDP is 1170. Net primary income is here, factor income from abroad, factor payments to abroad. You have received 40, paid 60. So 40 minus 60, then you get a minus 20. Then how much do you get as your GNI? 1150 minus 20, you get 1170 minus 20, you get 1150. So here GDE and GNE is the same, but you will start thinking twice if once you get the same number. Can someone confirm? Past paper book also has the same number. Yes. Yeah, right. Then net national expenditure. So you have gross national expenditure. So how do you go from gross national expenditure to net national expenditure? Gross to net, what do you do? You have to deduct CF. So GNE is 1150. CFC is how much? That is depreciation within. That is a 40, no? Minus a 40. How much do you get? 1110. Net national expenditure. That's a 12-mark question. I don't think your paper will give you 12 marks like this, but maybe each of these for 2 marks could be a possibility. Not for 12. Right. That's 2014. Then going 50. Major sources of national savings in Sri Lanka. You can write this in multiple ways, Lamai. So national savings, you can say, now if you take domestic savings, so it's domestic savings plus this. So you can say your investment your net exports plus net primary income plus net secondary income, or even domestic savings. You can write it like this: household savings, businesses savings, government savings, all of that is domestic savings, no? Plus net primary income plus net secondary income. So those, write it one under the other. That should be okay. Those are the sources. Sources means where does it come from? So national savings comes from household savings, business savings, government savings, net primary income, and net secondary income. I feel this is a better approach, but even if you give this, you should get your marks. Okay. Done. 2015 question number part 4. They've given you some information. Gross private domestic investment, government purchase, GDP, current account balance, government transfers, interest payments, factor income received, factor income paid, net foreign current transfers. I would not say domestic savings plus this. You have to show where does domestic savings come from as well. Okay, first one is asking for net exports. How do you get net exports in this question? It's a interesting one. How do you get it? From your what? You can get it from your what? Something we learned from unit number 10. From your BOP current account balance. Remember, your BOP current account balance is equal to what and what? It's equal to your net exports, your net primary income, plus your net current transfers. So BOP current account balance, they are saying is minus 25. Net exports is what I want. Net primary income, they have given Nilama here. Factor income received is 7, paid is 12. So then that is 7 minus 12. 7 minus 12 is minus 5. Net current transfers, they have given us 10. So if you work around 11, how much do you get as net exports? You get a minus 30 or plus 30? Minus 30. Okay, that's part A. Okay. Then part B is asking for private consumption. How can you get private consumption now? You have all your GDP components. Expenditure per GDP. So you have everything. So how do you get that? For part B, you have private consumption is what you want. Government consumption, investment, net exports. That is GDP. So your GDP is equal to how much? They have told us it's 400. Net exports you got as minus 30. Investment, gross private investment is 70. Government purchases are how much? Government purchases are 50. So how much do you get as private consumption? You write it as an equation this way, you can work out how much do you get? 310. Okay, that's part B. Then part C is asking for disposable GNI. Easy, no? You have GDP. To GDP, if you add net primary income, you get GNI. For GNI, if you add net current transfers, you get disposable GNI. GDP is given in the question 400. Net primary income is 7 minus 12, that is minus 5. Then GNI is 395. Current transfers are 10. This becomes 400 and as long as you know the equation, Lama, it's just about plugging the numbers. Then the last one, D. Now this is interesting one. Government savings. So how do you get government savings is Lamai? All the government's revenue minus all their expenditure. So look at this. Government's revenue, I'll circle these in yellow. So taxes are government's revenue. Anything else? Nothing else is government's revenue. Government's expenditure, Lama, you can see there are multiple things in this. One is government purchase, this 50. This government transfers to households, that is also a government expenditure. Then interest payments from government, that's also a government expenditure. So from the yellow 100, if you minus all the green ones, you will get government savings. So government savings, their revenue is 100, their expenditure is 50, 25, 15. How much is that? 75, 90. Government savings is then a 10. That's how you get that. So be a little careful there. It's not just P minus G. There are more expenditure components for the government. Because remember, now this government purchase is a component of GDP, but transfers are not a component of GDP, right? Interest payments that the government pays is not a component of GDP. That's why they have given that separately. So that's that. Government budget and government savings are ideally kind of the same thing. So government savings will usually not include capital expenditure. But at this level for unit 5, you don't have to go that much. Okay. Right, that's 2015 part 4. Then 16. Major components of aggregate income. You can give the components of the income approach, compensation of employees, this. Or even if you say aggregate income, you can even say rent, wages, interest, profits, and depreciation. That also is okay because they're talking about aggregate income. So I would say easiest way, remember one method. So write the income approach, the components. Same thing we had before. Just write that. That's total income approach. You get the total income of the country. Okay. Right. Then 2017. 2017 part 2. What are the major components of gross fixed capital formation? What is fixed capital formation? Fixed capital formation, Lama, is the investment of fixed assets. So what do you think you can put here? Now, there was one thing that we discussed in MCQs also. What do you think? We don't learn separate components, but we just say this. What do you have inside this? So you can write things like this. So what do you have as fixed capital in a country? You have, for example, you can say houses, right? So houses, or you can say dwellings. Right? What else? You can say machinery, right? You can talk about buildings. You can talk about what else? Right? Different equipment. You can talk about what else? Maybe motor vehicles, maybe highways, right? And you can put as fixed capital formation. So they're just asking for kind of examples. And maybe if you want, since this is gross, you can also put CFC. No, 3 components are there for capital formation. So under gross capital formation, you have gross fixed capital formation, change in inventory, change in value. They are not asking you this one, they're asking you 3 components of this. Not 3 components, components of this. So fixed capital. Since they're saying what are the components, explanation is not needed. So for example, like houses and buildings, what explanation to write? So just give points. That's okay. Okay. Can you just check the marking scheme as well? Is the answer similar to what I'm saying? This is 2017. Question 5 part 2. When you say income, you write the components of income approach. That is easy. Right. 16 is the component of income approach. Okay. Then 2017. Okay, there's a calculation. Part 5. They've given thing, they're asking for GDP and personal disposable income. Yeah, yes, vehicles now you have to say distribution vehicles, just normal motor vehicles that we use will be private consumption. It is a distribution vehicles. Okay, so GDP and personal disposable income. So how do you get to GDP? Lama? This expenditure approach easy, So private consumption, investment, government spending, exports minus imports. How much is that? See, now getting boring also, no? Investment is 200. Government spending is, why is there a line there? 200. Government spending is 300. Exports are 375. Imports are 325. How much do we get? 1, 2. Okay, so part B, personal disposable income. 2016, now the answer is the components of your income approach. That's all. Like, how do you get to personal disposable income? So you have national income, GDP. So from GDP, Lama, you have to go for what? You have to go to personal income. Remember, national income, personal income, there are certain things to add, certain things to deduct. Last time there was a thing to deduct, that was CFC. Is there anything like that, Lama? CFC this time? Consumption of fixed capital? Nothing like that. No, but there are taxes and transfers. So maybe this you can deduct when getting to personal income. So GDP is 1,250, here nothing. So we'll take personal income as 1,250 minus taxes plus any transfers. Transfers you can even adjust on top also. How much do we get? Taxes are 550, transfers are 300. So 1,250 minus 550 plus 300 is 1,000. How much do we get now? Is the number the same in your past paper book as well? Personal disposable income. 1,000. Can you just reconfirm? GDP 1,250, personal disposable income 1,000. Okay. Then going in the next one. 2018. So we have another 5 to 6 calculations. Okay. So assume you have been given the following data. Calculate GDP. Again, which approach? Gross domestic fixed capital formation, private consumption, net primary income. Easy one, no? Expenditure approach. So how do you calculate, Laman? You have private consumption, you have government purchases, you have gross domestic capital formation, and you get net exports. Private consumption, 3,000. Government purchases, 900. Gross domestic capital formation, they haven't given, right? They have given the components. Gross domestic fixed capital, change in inventory. Have they given change in value? No. So 800 minus a 50, this is 750. How did this come? 800 minus 50. Then net exports are 450. Then this is minus 150. 450 plus 600. Plus minus 450 minus 600. How much do we get? 4,500. So easy 4-mark question. You all have to show all the workings, right? I'm not showing all the workings here. You have to show all the workings when you calculate. Give me a second. Hold on. So that is also done. Yeah, these are very easy questions, Lamai. It's just that you need to know the equation. If you know the equation, these are Nikam Baba type actual easy ones. Short form is okay, but I would say 4 marks in the Lamai product long form, like a private consumption. Because remember, your timing is 1.5 minutes a mark. No? So if you can't finish it in 6 minutes, writing short forms are okay. You can finish the 6 minutes. Yeah, so give that. So 4,500 is this. Then 2019, question 5, part 1. Which of the following items are collective and which are individual? Collective means, Lama, you can't identify per person. Individual expenditure is what you can identify per person. Per person, you can say, this is this. So what do you think? Fertilizer subsidy. Fertilizer, you give it to a farmer. So can you say per farmer it is this much? You can, right? You can identify per person. That is individual expenditure. What about Lama, medical research? Can you identify per person medical research cost? That is something collective. What about Lamai police and fire brigade? Can the government say for Arshad police cost is this much? No, those are also collective. What about school midday meal? If I'm going to school, can the government say, okay, for Arshad we are spending this much on midday? Yes. Individual. So if you can identify it per person, the per person spending, it's individual. If you can't, it is collective. Okay. So just naming that, you'll get your 4 marks. Then 2019 question number 2. 8-mark question. They're asking for GVA, GDP, NNI, gross national disposable income. Easy one. Which approach though? Compensation of employees, gross operating surplus, CFC, other taxes, taxes on products, subject products. What is this? This is the income approach. So how do you get to GBA first? GBA is compensation of employees, gross operating surplus, mixed income, other taxes less subsidies on production. So compensation of employees is 25, gross operating surplus 6,000, mixed income they haven't given, other taxes less subsidies on production 50. So how much is your GBA? Is 8,550. Then next one is asking for GDP. How do you go from GBA to GDP? You add taxes on products minus subsidies on products. So add 1,200 minus 250. How much do we get? 9,500. Then they're asking for net national income. Can you go from GDP to net national income straight away? No. First, you have to go to GNI. So how much is GNI? Net primary income is minus 400. So how much do we get as GNI? GNI is 9,100. From GNI, if you remove CFC, that is how much? 700. You get net national income. That is 8,400. Okay, then you have the last one, gross national disposable income. How do you go to gross national disposable income? You have gross national income. GNI is 9,100. For this, if you add net current transfers or net secondary income, you get gross national disposable income. That is 10,100. So your answers are GBA is 85, GDP is 95, NNI is 84. This is 10,100. Those are your 4 answers. These I would say, Lamai, if you have done and properly done it and gone, these are actual free marks in your paper. You will not get 8 marks as easy as this. They haven't even given other components even to confuse you, Lamai. Only what you have to take, they have actually given. Now, sometimes they might give you other stuff to confuse you. That also they haven't done. So it's the easiest 8 marks that you can ever get. Okay. Then the next one, 2020 question number 2, they're asking for GNI and gross national savings. Gross national savings means national savings. How much is GNI? So when you say aggregate consumption, that is private consumption and government spending. Gross domestic capital formation ki investment. Plus exports minus imports, and then you get net primary income. You get GNI. So how much is your GNI? So you have aggregate consumption, investment, plus net exports. Aggregate consumption 10,000. Investment is gross domestic capital formation, that is 4,000. Net exports are 35 minus 45. How much do you get? 12,600 or 13,000? 10,000, 4,000, can't be 12,600. How much do you get? Sorry, GDP. Sorry, the GDP is 12,600 plus. Sorry, GDP is 13,000 plus net primary income. Then you get GNI. So that is a minus 400. How much do you get? GNI 12,600. Okay. Then gross national savings. What is national savings? Your investment, net exports, net primary income, net current transfer. So investment is gross domestic capital formation. Net exports is 35 minus 45, that is minus 1,000. Net primary income is minus 400. Net current transfer is the plus 1,000. How much do you get? 3,600. So again, 3 marks in your paper. Okay, 2021. So you have 2 more questions and we're done. 2021, question number 2. Table below gives some data related to national income accounting. They're asking for GDP, GNI, gross national disposable income, and domestic savings. So how do you get GDP? They have given us GVA plus taxes on products, right? Taxes less subsidies on products. So GVA is 11,500 plus taxless subsidies, that is 800. How much do you get as GDP? 12,300. Then they're asking for GNI. So for this, what do you have to add to get GNI? You have net primary income. How much is net primary income? That is minus 300. Then how much do you get here? 12,000. Then they're asking for disposable GNI. How do you go for disposable GNI? You have GNI as 12,000. You have to add net current transfers. Net current transfers are 900. So 12,000 plus 900, 12,900. Net disposable GNI. Very easy calculations. Then last one, domestic savings. How do you get domestic savings? It's your what and what. How do you get I plus NX? Where is I? Where is NX? How do you get I and NX? If you don't have I and NX, what else do you have left? So from your GDP, you minus consumption level. Now, so the last one, from GDP, if you minus consumption level, you get I and NX. So from your GDP minus, so GDP is 12,300. You found that in the previous part. Consumption they have given, so we can assume that this is private and government consumption both, right? So that is 8,500. How much do you get there? 3,700. 3,800. 3,800. That's national domestic savings. That. Then the last one, 2023. Same thing is the third time they ask. What are the main sources of primary income to be included in the estimation of GDI? Remember, there was an MCQ. So here you can talk about this number. You can talk about compensation of employees, gross operating surplus, mixed income, other taxes, less subsidies on production and imports. Like that MCQ that they had. So you write that. Taxes, less subsidies on production and imports. There will be alternative answers for this number. You can give it as rent, wages, interest, profit, that story. But I would say give the income approach one thing to study, then give it that. 2024, there was no calculation. So 2023 and 2024, there is no income and expenditure approach calculation. Maybe in 2025, since 2 years they didn't test the calculation, in your year, there can be an income expenditure approach, something like this, a calculation can come. So if a calculation like that comes, Lama, that is actually something that is easy for you to actually do. Right, so that's all the things. I hope you all did the questions and came, otherwise the explanation would have been way too fast. So with that, we are done with unit number 5. Next class, we will start unit 6. I will send the past papers. I'll break it down and I will send it. We can get started with unit 6. Cool. Unit 6 is actually small. We can finish it off faster. Okay. So with that, I'll call it off. If you all have questions, do stay and clarify. The others, I will see you all next class. See you. Bye-bye.